Everyone, welcome to Market Insight for the week of May 6th through the 10th. I've been away for several weeks, a month now, and it's good to be back. So let's dig into our charts here on the S&P, starting as usual with the monthly chart. So we can see that the monthly, and we had talked about this before I left, the monthly had gotten overbought in the trend channel here over the last 2 months, in March and then in April. And at the end of April, with a close back inside the trend channel after overshooting that supply line. This is the supply line. We overshot it, and now we're closing back inside. So now this doesn't mean that the market will definitely fall, but these are the conditions we typically see when a time frame is vulnerable to a pullback after a strong trend run up or a strong rally up. And as I say, in addition to being overbought and closing back inside the uptrend channel, I note that the April volume was large, and we see an increase in downside volume. So some supply clearly came into the market on this time frame, and so as I said, the market has the conditions for being vulnerable to a pullback. And if it does pull back, it'll be on the scale of a monthly pullback, right? Meaning that the daily is going to look pretty significant when it does pull back like that. And so to kind of get a little handle on that, we can see that the last pullback that we had here from August to October 2023, that ran about 512 points, give or take. And if we apply that standard and get to the current price action here, assuming we get a similar type pullback, and we off of the highs here of 53.33, we'd see a pullback to around 48.20, give or take. And this would be more or less consistent with the key levels of support that we see on the monthly chart. That's at 48.08 here, this heavy blue line, and just underneath that at 46.34.50, should the market want to go a little bit deeper. So this is consistent with what we're seeing there on the monthly. And I've boxed this area in like a bluish green there, highlighting it, indicating this is likely, if we do get a pullback, this would be likely the area where the market starts to find support and starts to hold. And obviously, if we do get such a pullback, it's likely to occur. It's not going to occur next week necessarily. It's more likely to occur over several weeks, maybe even months. So we'll watch that area as it develops into the future if a pullback does indeed occur. Let's turn our attention to the weekly. The reaction from the late March highs here sees volume pick up on the way down. Late March highs are up in here, and we pick up volume. And so we see volume expand and increase as the market reacted. And although the market more or less held the 50-60 crisscross level here, right? A couple of bars here at high and a couple of bars here at the low, that's about 50-60. Market more or less held that. Went deeper, of course, but then rallied back up over the top of it. Even though it held there, that increase in volume indicates the presence of supply. And the last 2 weeks, both closed firm, right? But they're both inside this larger supply bar here, the supply week with the largest downside volume. This was the week that ended April 19th, and I'll come back to this in a moment. So one thing I want to highlight here is that although we've fallen now about 360, 70 points from the 5,300 high up here, this is so far just a normal pullback, right? We can compare this with what we saw last time here, the last pullback, and see that we have quite a ways to go before the weekly turns down with a bearish change of behavior. So although it may still go lower, longer term, given this kind of indication, on the weekly at least, the market is still appears to be bullish. Now, the last 2 weeks, let's go back to this here. The last 2 weeks are inside that larger down bar. The top of this down bar is 52.13. 52.13 or 53.13? I think it's 53.13. I've got the number more clear in a moment. This is not just the high of the significant supply, but it's also in the pocket area here, in the weekly pocket, right? This high here. So we could expect this to pose some pretty significant resistance, at least on the initial rally into it. So if that level, if that level does break, then it indicates more bullishness than what I'm seeing here. And we'd likely retest the highs at 5,300 and maybe start up with a new leg going higher. Let's turn to the daily here. It is about that 52.13. So if it's 52.13, not 53, I made an error there. So the daily is showing. Before we do this chart, though, let's take a look at a different chart. Hang on here a second. There we go. So this is a chart of the Weiss wave. It's a 15-point reversal here on the regular daily chart. And so this daily is showing a larger move down than what we've seen recently. Since the recent rally started down here, we see the pullbacks have been relatively, have been small, been relatively, normal kinds of pullbacks, right? Except the pullback in the recent days here, this recent pullback. We can highlight that. This is a larger wave down than seen before, and also has the largest downside volume highlighted here since the October low, since the rally began. So we got the largest downside wave with the largest downside volume since the rally began. This suggests this is, in fact, a bearish change of behavior in the wave structure on the daily chart. Now, the skillful trader will also see this as the beginning of a potential shell divers tragedy setup. Now, I discussed the shell divers tragedy in the last deep practice session, and I discussed it fairly extensively. So if you're unsure of the setup, consult that recording. I'll go into a little bit of detail there and highlight that. I think on the daily chart, on an intraday chart, but the same thing applies here on the daily. So given the, given the overbought condition on the monthly and the weak rally so far on the weekly, highlighted by the last, those last two inside bars on the weekly. The change of behavior suggests a potential for more downside. Now, if this is true, we'll see the current rally on the daily falter, this current rally here falter, and we'll start to see it turn down. So let's see how that might play out on a little bit more of a detailed chart, the initial chart I put up here on the daily. So back to this initial chart here, I've highlighted the top of that weekly supply bar incorrectly. It's 50.25. That's the correct number. For that weekly supply bar, the top of that weekly down bar with the biggest downside volume. And I marked that with the red dash line and brought it over to the right-hand side. And we can see some confluence in that area when we extend over to the right, and we see the top of the weekly supply bar at 52.13, and that's intersecting with the supply line of this little uptrend channel that we have now on the daily. Also, we have old support here around 51.90, 51.91 and a half. And that's in that general area as well. And that's going to add to the resistance. We've got confluence there, pretty good confluence. And also, there's a lot of congestion if we go backwards here. there's a lot of congestion in this area, meaning that there's a lot of price bar overlap, right? We can draw a line through and hit pretty much every one of those bars in that congestion area. And so all of this is to say that it will be challenging for the market to overcome this area, right? It's going to be tough to do that. Not to say that it can't do that, but it's going to be a bit of a challenge to do so. Let me make sure I'm saying now. Yeah, I'm saying it's challenging, as I say, but not impossible. We have to see the negative. We don't want to just go in there blindly and short. We want to see some negative price action in this area, in this boxed area, on the daily and maybe the 240-minute charts, right? And then see price turn down for the shell diver tragedy setup. In other words, the shell diver tragedy would be making a first lower high here, right? A lower high, and then turn from there down. So this is the area to watch. That resistance between, say, 51, 52.13, right? 50, I'll get that number right yet. Now, if this does become resistance and the market does turn down from that area, then first support level is what? 54, 51, 54, right in here, right? And then from there down towards around 5100. Let's erase this so that we're clear. So 54, right in there, and then around 5100, back down to the broken supply line. And then we'll see what happens from that point. So this is how I'm thinking about the next week. If the market's able to push through 52.13 though and overcome that weekly supply bar, then, as I said before, a retest of the 53.33 highs is probably likely or would be expected, at least an approach up there to that level. Let's take a look at the major markets. All three are basically in sync. The NASDAQ is going to run into the congestion and supply earlier here than the others, or if the market is going to go lower. So we'll keep an eye on the NASDAQ for an early indication next week that that's actually occurring. Let's also take a look at a little bit longer term perspective here. I wanted just to fill this in for us. Looking at the point and figure chart. This is our standard 50/1 point and figure based off of the 60-minute highs and lows. And we could use a higher time frame, maybe 100 point and figure. And we could do it off of the daily highs and lows. That would be fine too. It gives us basically, I think that chart gives us a projection up to around 6,000, maybe 6,100, if I recall correctly. But don't hold me to that. I haven't really looked at that chart for a while. I tend to like this one for our purposes. It gives us the larger picture, but also gives us a little bit of the smaller picture too. And that's why I like this chart. In any event, let's take a look at this point and figure. You can see that we have an unfulfilled count here of 5550. And with a stepping stone confirming count here, and I'll go through these in a minute. Stepping stone confirming count. And usually that's pretty good. That indicates pretty robust projections there. Again, nothing is 100% in this business, and I'm not saying it's definitely going to go there. These are the areas that Bob Evans would say when he was alive and doing the Wyckoff, doing the educational stuff for Wyckoff. He would say that these are areas, these are good projection areas, and once we get there, we want to stop, look, and listen to see what the market is telling us on the vertical line charts, the standard high, low, close with volume bars to see if that's going to hold or not. So in any event, we're working off of the count from the 3,800 line. That's this line right here, which has 35 figures going across, going back. This is a nice accumulation structure right in here. Typical, looks like a typical accumulation structure. And that projects up to first to 5250. We've already exceeded that. And then so we would look at the next projection up, 55.50. And then later in the rally, at the 41.50 line or level, we get a confirming count. And here we have 28 figures, and that again projects up to 55.50. So pretty robust point and figure projection here. Now, if we do get a pullback, as we've been talking about, a monthly pullback, weekly pullback, and that's going to pull us down to around the 4,800 level, and that's basically this line here, extended. So if we come down into this area somewhere, I'd be looking for another stepping stone confirming count to take us, that projects back up to 55.50. If we get that, that would be great. It would also indicate a sense of timing. Once that confirming count reach that, if it does, once it reaches the projection as it did here, right? We can see we had a projection here to 55.50, and that was done back at the very end of last year, or the early part of 23, excuse me. And then at the beginning of 2024, this year, we have that confirming count. We had a pullback coming into that. And the pullback ended right in here at the point when the stepping stone count was consistent with the original count. It's a useful timing feature in point and figure chart work. So that's why I say if we do come down into this area, and then I'd be looking for the cause to be built with a projection back up to 55.50 area. It doesn't have to be exact, but in that general area. And if that occurs, then that could be a good indication of timing. And again, we would look to the daily and the 240 chart for indications that the market is now starting to hold, and maybe we see a change of behavior on the 240-minute chart, indicating that a rally is about to take place. And that might be if we were looking for a longer-term swing trade kind of a trade. That might be something we would be interested in. So all of this is to say that the point and figure chart remains bullish. The good count, good confirmed count up to 55.50, and we'll see but we've got pullbacks potentially from the monthly and down, including a shell divers tragedy on the daily. So we'll see how all this develops over the coming days, weeks, and months. And just as for what's on tap for this week, we'll be doing deep practice on our normal time, Thursday, May 9th at 8:00 p.m. And it's good to be back from a nice holiday. It was very pleasant out on the West Coast. We saw our sun, and then we went to California and did a little tourist stuff there, and then did a nice meditation retreat for several days. But now we're back. And so I'm looking forward to getting back involved in the markets and back involved with deep practice and trade mindfully. So I'll see you all on Thursday next week. Have a great rest of the weekend and a terrific trading week. And we'll be back online on the 9th for deep practice. And I'll see you then. Take care, everybody. Bye-bye.